Good afternoon, everyone. So today we are going to look at single entry and incomplete records. So single entry and incomplete records, from the word you see single. So let's begin by understanding by the word single entry. Single entry simply means these are businesses that do not complete double entry rule, as they always record transactions once. What does it mean? Under these businesses, they either debit but not credit, or credit but not debit. You know, in a double entry principle, for every corresponding debit, for every debit entry, it has a corresponding credit, and every credit entry, it has a corresponding debit. But under single entry, we always record transactions once. You record it once. So these businesses, they record, they don't have time to, they don't complete double entry. So that's single entry. Then incomplete records, these are businesses that do not record all accounting transactions. They record books without proper books of account. So under incomplete, the way you hear the word incomplete, they record transactions, but they don't record everything. They record a few and leave out what? A few. So let's look at now the characteristics of single entry. So the characteristics of single entry that we have: one, they usually keep a cash book and a cash receipts. Single entry, most especially businesses for our parents. I don't think most of our parents, except these big organizations, some of our parents that have small shops, those ones that work in the market, they mainly write some few things. They don't write everything. So those are the smaller businesses are single entry. Then they require to prepare accounting information out of incomplete records. Then it requires profit and losses. So most of these businesses, mainly, they require to prepare profit and what? Losses. Now let's go to reasons why businesses keep incomplete what? Records. One of the reasons is ignorance, illiteracy. If you find some of our parents don't have knowledge about the double entry, sometimes manyate, cash book, what, so they just record their transaction the way they want. Then two, limited, so I've explained the ignorance. Two, limited time. So the limited time, you don't have time. Remember, some of these businesses, they are sole proprietorship. You have to sell, to buy, so you don't have the time to do what? To compute this accounting. Then limited skills. They don't have enough skills. Limited funds to employ skilled personnel like the accountants. So some of our small businesses, some businesses they don't have time. Then fear of embezzlement of funds. They don't want to. They fear that if I bring an accountant, he will embezzle some of my funds, and they are usually small enterprises. Most of these businesses are small, so that's why they end up keeping. They don't keep proper books of accounts, and they record transactions once. So another thing, methods, we have single entry method, which is the net worth method, which is the single entry, and another is the conversion method. So when you are calculating single entry and incomplete records, you have two methods: the single entry and the conversion. So single entry is the net worth, then conversion is the incomplete records. So the net worth, this method is used when information is not adequate to prepare the income statement and the balance sheet. And here we get profits of a company by computing the opening balance and the closing balance. Under the net worth method, we say net profit equals to closing balance minus opening balance. We shall see if we enter into a calculation. So this is a format